Ladies and gentlemen, welcome. This is Christopher Aaron. It is December 11th, 2019. There was a Federal Reserve meeting here in the United States today. The central bank met. We're going to look at how that impacted the markets with a focus on gold and silver, which is our focus here for the time being. We will be expanding into some other areas in 2020, but for the moment, let's focus on gold and silver because I think the big move is coming up in gold and silver, at least as far as 2020 goes. Here is the Federal Reserve, the building in Washington, D.C. And by the way, if I sound a little different, it's because I'm just getting over a cold today. You might be able to hear it. But the meeting, and here is our lovely chairman, Jerome Powell. And I'm just going to give you the bullet points, the most important things that I took away from the meeting today. First of all, no change in the interest rate policy here in the U.S. It remains a range of 1.5 to 1.75%. And some quotes, some things that he said that I think are really important. This was the big one. In order to move rates up, in other words, when are we going to see higher rates? Because these rates are still generationally low. Really, we're talking 75-year lows here for these rates. So in order to move rates up, I would want to see inflation that's persistent and that's significant. Okay, so I think this is important to remember. This is why I generally take an opposite viewpoint from most analysts as to interest rates and gold. Because if you think about it, so most people say that lower interest rates are positive for gold. I say that higher interest rates are positive for gold. And this quote here from Jerome Powell really illustrates that. If you look at it, so to move rates up, he would have to see inflation, right? So that's why I think that higher rates are beneficial for gold, because when the Fed finally moves rates higher, that's because inflation is becoming apparent. And if it's becoming apparent to the Fed, I believe that it would be becoming apparent to the broader markets, which is positive for gold and especially silver. Okay, so I think we're seeing that ahead of time here, that when they finally move those rates up, there's going to be high inflation coming. And this was really important too. The Federal Reserve would consider buying short-term maturity coupon-bearing treasuries if financing pressures hinder the central bank's ability to administer its interest rate policy. Blah, blah, blah. What are they really talking about here? Buying short-term treasuries. Okay? The important word here, buying. What is this a euphemism for? Where does the central bank, you have to filter everything that the Fed chairman says here through a machine, a special machine that gives you the actual meaning to what he's saying and strips away these euphemisms. What is the special machine? It's called iGold Advisor. We give you the definitions right here. Buying short-term maturity treasuries is a euphemism for the printing press. Yes, because I've made this point several times in the past. The Fed has no other tools other than to print money. It's only a question of where are they going to give that money to, who are they going to give it to once they print it. So remember, buying, the Fed has no reserves, even though it's called the Federal Reserve. There are no reserves inherent in the Fed itself. The only place that the Fed gets the money to buy anything, whether it's long-term bonds, short-term bonds, mortgage-backed securities, if they want to go out and buy stocks, the only place they can buy from is by ramping up the printing press. And, there would be no problem with the Fed doing whatever it wants, supporting any asset markets. The key is that when they buy and therefore print, they are devaluing the currency that the rest of us hold. And so that's why it's an insidious process, and I do not think that it is right. But they've just telegraphed here, this is what they are planning to do if they run into financing pressure related to the interest rate policy. Once again, more printing coming down the road. And so how did the markets respond? Here was the meeting today, 2 p.m. Very good price action to see here if you are investing in the precious metals, because it looks like this next move higher is about to begin, or it's, right on the doorsteps. And by the way, I'm not one of these people talking about $5,000 gold or $10,000 gold. I don't think we need that. I don't think that's coming anytime soon. I'm looking at a much more reasonable set of targets, and we'll look at that in just a moment. But here was the reaction. So let's look at the metals first. Gold higher by a little under 1%. Silver doing well. So this was definitely a flight to safety in a monetary sense here. I would say this is nice to see because it was a bit of a reversal of that day on Friday, where we saw the dollar higher and we saw silver lower. And the gold miners, I would just say, if you're at all thinking about investing in the gold miners, you don't have too much time left. These days, like we're seeing right now, are going to be more frequent here over the next 3 to 6 to 9 months. And I will not be recommending that people buy the gold miners once this move starts. It'll basically be, the move's underway. I can no longer in good conscience recommend that you chase these things. But we're not at that point yet. I think you're in the final window here. It's tough to say, a few weeks, maybe a month or two before this next move really begins to shoot higher. Commodities were lower. The dollar was lower. The big thing, though, that I actually want to draw your attention to is right here. The correlation between gold and the U.S. long-term bond market. So if you notice here, you look at the gold line here and the purple line here representing long-term. These are 20 and 30-year bonds. Notice how tightly these were correlated. So it's a bit perverse if you think about it, because the dollar was lower, right, for good reasons, because Powell was basically telegraphing ahead of time that there is more money printing to come. So people sold the dollar, which makes sense. But what did they do as a sort of Pavlovian instinctive mechanism? As a fear trade, they went into U.S. bonds. U.S. bonds are dollars in the future. So it makes no sense, except that I think, we've been in a rising bond market for 40 years. 40 years of rising bonds. And so I think people have become so conditioned to buy bonds on a fear type of reaction that we are seeing this here. And I'll just tell you that I think the real move in gold will not begin until we see this type of correlation breaking down, where gold rises on a day that bonds were lower. We're not seeing that yet. So that's why I still think this is kind of the warm-up period here. And for that matter, I think that actual divergence could still be a few years away after a lot of challenging period ahead for precious metals investors that could be quite volatile over the next several years. But that's the big correlation that I want to see change here, gold and the U.S. bond market. So with all those fundamentals, you know me, I'm not a huge fundamental person, but here we had a Fed meeting. It was pretty important. We did see a distinct market reaction. That's fine. I like to cover those things. But, it's like my analogy is, what percentage of the fundamentals is that we just looked at? Is that 1 out of 1? Is that the most important fundamental that we're looking at? Was that 1 out of 10? Was that 1 out of a million? I don't know. I have no way to know that. What can I know? I can know what the sum of the entire market is thinking by looking at price and price alone. So now we're getting into the gold price, and what I want to draw your attention to is how this market is changing here. Here was the big move out of the May low in the top, and we were really warning people in this top that they should not chase it right here and right now. But look at how this market is changing. So notice these turquoise colors, these broken trends here. Notice how, so from the absolute high, connecting the second major high, connecting this third peak right here in October. Then we had this false breakout right here in the beginning of November. It fell back lower, and now we're seeing this second break of this initial downtrend, the turquoise trend. So what's happening here, and by the way, this annotation was written a few days ago, that we should look for the broken trend to act as support. Premium subscribers, you know what I'm talking about. So just look really closely here. This is textbook, very nice textbook technical action. Look at how the gold price exceeded this trend finally on the second time. I said it'd be rare to have two false breakouts in a row. It exceeded that. We came back and look where the gold price held right down here, right above 1460. Notice it held right on that broken trend line. So if you're someone you like to follow, by the way, this principle works for so many different markets, not just gold. And we'll be doing more, technical education type of videos in the future for people that want to apply this to other commodities and other markets. But look at how that worked, right? We had the second break holding now. So if you want to ask me what is setting up here over the short run, what we can see is now that there is a lesser downtrend shown here in the teal color. So this is how markets transition. If you think about it, all we're plotting out is how are the sum of the buyers and the sellers transitioning from a more steep initial downtrend to a lesser downtrend, right, in the teal color. And then I think we have a little bit more follow-through action coming over the next couple of days. Let's call it the rest of this week. Then what I think is going to happen is this upper, lesser downtrend here is going to act as resistance into the middle part of December, perhaps till right around Christmas. And then we get to that point, and I will tell you what, I think this entire thing is going to break strongly to the upside. I think this entire thing is like a bull flag formation. We see this often in these markets where you have an impulsive move higher and then you have a grinding kind of decline lower. And let's back this out so you can get the perspective. Why do I really think this is happening? Because, by the way, we were just looking at this little window right here for perspective. Here's gold from 2011 to the present. And so we've had this 6-year base. You can see that underneath the 1434 figure, 6-year nice cupping base. Here was the breakout, by the way, on the highest gold trading volume of all time. I'm not making this up. Here it is. The highest volume of all time came on this breakout. So you see a breakout and then you see a 1-month surge. It would be one of the rarest things in technical terms to see a 6-year base only lead to a 1-month surge and then for this market to kind of just fade back for the next few years. That would be extremely rare. I would not bet on that if I were a betting person, which I am, and so I'm not betting on it. I'm betting on the opposite, which is that this impulse here that we saw is now retesting the breakout point and that there is another impulsive move coming higher. And I'm not going to give my official targets for gold quite yet. Premium subscribers, you know you have those already, and we may look at those in the future as we get closer to that point in 2020. But the takeaway here is you see gold grinding and grinding and grinding. This is exactly what needs to happen at this point to convince the people, I'll tell you, to convince the people that chased this market and only bought at 1550 here a few months ago, and then they get impatient and they say, this is not for me, to convince all those people to get out. This is the type of price action that markets do to try to take the least number of participants with them. This bull flag that we're seeing, and there should be another impulsive wave coming after that. Make sure to hit the subscribe button if you're new to this so you will get all of the updates. And if you want to see videos like this that are much more in as far as breadth and depth goes, we do hour and 15-minute videos like this for subscribers that cover not only gold, but silver, the US dollar, the US stock market, and the GDX gold mining sector, as well as all of the buy and sell signals that we are using here for the exact miners that we are investing in. There's a ton of information that is out there, and this service allows you to get everything in a concise weekly and monthly format. You get weekly videos, you get monthly updates, all delivered right to your inbox. If you would like a more personalized conversation with myself, please know you can reach me on the Consultations tab. I don't take any funds from any of the companies that we're talking about, even including an Impact Silver. I don't take any funds from any of the ETFs or any of the bullion funds that we talk about. I work for the benefit of individuals only. So you can reach me on the Consultations tab about that. I actually also wanted to say thank you very much to the new subscribers that we have on Patreon. This is a way that I just had some people say, hey, I'd like to donate a couple of dollars because I can't afford, these services, which I totally understand. They're at a certain price point. But I've had people ask me that, and that's why I put that up. I literally had no intention of putting that up until people asked me if they could contribute a few dollars for these videos, because people find some value. At least that's what I hope. I hope to bring some value to you here. So coming back to gold, we're seeing those signs. The Federal Reserve today, this meeting, I think this was a very bullish meeting for gold and silver over the intermediate term. There are no more hikes, no more cuts along the way. The Fed is going to stand still for a while. But they're saying if we don't get enough inflation, this is the takeaway. If we don't get enough inflation, as if inflation is such a great thing for all of us, tongue in cheek, then we are going to print more money until we get enough inflation. That is basically what the Federal Reserve says. And if you don't have any gold or silver or gold mining stocks at this point, I don't think you have too much time until this next surge begins. 2020 is I think it's going to start off as an excellent year. The year-end wrap-up is coming up in a couple weeks. But I don't think 2020 is going to be a straight line. I think it's going to have a lot of volatility in it. I think it will also scare a lot of people out who are not following it. Thank you for tuning in. Bullish things here for the metals, and I will see you this time next week.